I wasn't going to make a video today, but I absolutely had to. This literally just came out, investor presentation. They did a call. So DraftKings, you've already heard this by now, is acquiring Golden Nugget Online Gaming, ticker GNOG, GNOG, through an all-stock merger. This is absolutely massive, and I didn't realize how massive it really was until I actually broke this down. You're going to want to watch this. DraftKings is one of my top 25 high-conviction stock picks. And honestly, this acquisition just makes that bull case for me even stronger. I'm going to go through this as fast as I can. This is great information, especially if you own one of these stocks or if you're considering buying DraftKings. The deal's not going to close until Q1 of 2022, so there is some time. But adding GNOG enables greater iGaming market share potential while being more efficient with marketing multiple brands serving different customer segments. And you're going to see some really good visuals here in a second. So GNOG has this is important, guys, very strong live dealer operational capabilities, which are difficult to develop. There's a lot of barriers of entry in there and an important growing part of the iGaming portfolio. DraftKings right now, guys, does not have in-game brick and mortar casinos. This deal gives them that brick and mortar in-house casino. And now they can compete directly with like Penn National Gaming. You think of Barstool Sports and Penn. You know, one of the differentiators, people say, why not Penn? And you can make an argument, well, Penn has the in-house casinos, which can be very powerful, especially on a reopen type play. And now DraftKings is going to have that in 2022, assuming this goes through. This is really big. In addition to the acquisition, and this is huge too, and this is something I didn't understand when I first heard the news. In addition to the acquisition, okay, so this is an addition, this is a separate agreement. They're entering into a strategic commercial agreement with Golden Nugget Retail Casinos, Landry's, and the Houston Rockets. It includes access to a large database, basically marketing rights. I think I saw somewhere 5 million potential customers in this database. That's huge for marketing, for branding. The resulting synergies, and I'll cover this more in a second, results in about $300 million or more in EBITDA at maturity. An all-stock deal like this preserves balance sheet strength and enhances the DraftKings board because they're going to be adding Tillman Fertitta. Now, if you don't know who that is, he's a legendary business person, a Texan, very smart guy, knows what he's doing. And honestly, for me, if he's doing this deal, it adds even more conviction in DraftKings for me. You know, and then the GNOG shareholders benefit by being part of DraftKings due to its competitive advantages, leading market position, digital DNA, and so on. This is going to create a powerhouse. So it'll increase their iGaming market share. It's going to bring that live dealer in-house, access the skins, leverage the databases, launch integrated marketing campaigns, rebrand the retail sports books, and deepen relationship with Houston Rockets. So they're going to have access to assets controlled by the Houston Rockets for sponsorship, media integrations, you know, signage, hospitality, all those different things. So the Toyota Center and the Houston Rockets, I think that's going to be huge as well. I'm going to cover some of these restaurants as well with the integrated marketing in a different slide here in a second. But things like Morton's Steakhouse and Bubba Gump. This is a cool slide here. So benefits of having multiple brands. For DraftKings, the additional Golden Nugget user base will enhance DraftKings' reach across diverse customer demographics. And on the Golden Nugget side, combined company has more efficient marketing due to scale, combined capabilities, and focused brand strategies. DraftKings' broad market footprint allows GNOG to quickly replicate its iGaming success in New Jersey, Michigan, and West Virginia, and Pennsylvania, and other iGaming states as they come online. I know Illinois is one in 2022. On the GNOG side, combination of all online presence and physical property creates expanded opportunities for customer acquisition. So guys, Golden Nugget's been around for a while. You've heard of them, right? So it's really a legendary kind of name. This is why a lot of people really liked the GNOG SPAC and they wanted to get into the SPAC. You look at on the right-hand side, iconic founder and CEO, billion-dollar buyer was CNBC's most watched premiere hour ever. He's on CNBC all the time. Now, Tillman is also a New York Times best-selling author, and of course, he's the owner of the Houston Rockets. Now, when you look at this best-in-class restaurant portfolio, this is going to be big. You see Morton's there, you see Palm. There's a lot of really big names. I'm going to cover another slide here in a second. So here's some of those synergies. You got revenue synergies, you got elimination of platform costs. What they're going to do is it's going to bring Golden Nugget onto the DraftKings in-house technology and eliminate Golden Nugget third-party platform costs over time. So if you recall, DraftKings used to use a third-party vendor. They actually eliminated that, built it kind of in-house. They're going to be able to use that in-house infrastructure for Golden Nugget. That's going to additionally save them a bunch of money in the long run. Also, skin fee savings, marketing efficiency, and overhead reduction. The expected synergies here, guys, over $300 million at maturity. Here's some of the details on the transaction. So if you own GNOG, you're going to receive 0.365 DraftKings Class A common shares. That's an implied equity market valuation of about $1.56 billion. Offer value implies a 7.6x 2022 earnings revenue multiple for GNOG and represents a 51% premium to the 60-day as of August 6th. So at close, DraftKings is going to own 93.4% of the pro forma company. We already kind of mentioned this, but this combination is going to unlock a lot of value here, provide enhanced market access, database access, integration with retail restaurants and retail sportsbooks. So each 5% of incremental iGaming market share is worth $675 million plus in gross revenue at maturity. This is a long-term play, and this is powerful right here, okay? So this is value from incremental North America iGaming market share scenarios, non-GAAP gross revenue. So you can see here, additional 5% versus DraftKings 2021 Investor Day, 696, additional 10%, and so on. So an additional 25%, this is in millions, it gives you 3,480, and that's in millions. This here breaks down the enterprise value build. And so essentially you've got diluted shares outstanding. You can kind of see the numbers on your screen. But what I really want to show you here is the total enterprise value. If you look at 2023 revenue, they're looking at a 4.9x on GNOG standalone, and then DraftKings standalone at 9.1x. Competitive advantages, this is really good, right? Land-based gaming we kind of talked about. So you got Golden Nugget casinos, brick and mortar. You got them in Vegas, Atlantic City, Illinois in 2022. There's other locations. Upscale restaurants, okay? You've got Morton Steakhouse. Look at some of the names on here. The Oceaneer, Palm Restaurant, Catch. Some really good names on here, guys. And then the casual restaurants you've heard of, like Bubba Gump, Rainforest Cafe, Joe's Crab Shack, Landry's, Bill's Bar and Burger, T-Rex, and so on. Here's a press release from the DraftKings website. A quote here. Our acquisition of Golden Nugget Online Gaming, a brand synonymous with iGaming and entertainment, will enhance our ability to instantly reach a broader consumer base, including Golden Nugget's loyal iGaming first customers, says Jason Robbins, DraftKings CEO and chairman of the board. This deal creates meaningful synergies, such as increased combined company revenues driven by additional cross-sell opportunities, loyalty integrations, and tech-driven product expansion, as well as technology optimization and greater marketing efficiencies. We look forward to Tillman being an active member of our board and one of our largest shareholders. I'm telling you guys, Tillman's a really smart guy. If he's part of this deal, I want in even more. You know, the stock is pretty expensive on DraftKings where it's at. It was a buy in Discord at $35. I want to bring this to you. Also, if you're interested in the top 25, I've got a top 25 high conviction stock list. You can get that. You can get access to that as a 30-minute video that breaks down all those stocks. There's 29 total stocks, and you can actually join the Discord community so you can get access to our basic Discord tier as well as that 30-minute video and an actual chart with 29 of my favorite stocks broken down granularly by growth, by risk score, management score, moat score, etc. So check out Fired Up Wealth Patreon. Any tier will get you into that 25 conviction list. But this is a big deal. I really like this stock and this company. DraftKings was already a high conviction stock pick. This actually just strengthens that thesis even more. I appreciate your time and attention. Please subscribe to the channel. Drop me a like, drop me a comment. Have a great rest of your day. Take care.